Welcome to Looking at the Markets with me, David Moadel. Today we're going to talk about a couple of questions, in fact, two questions that I ask before buying any stock or call option. Know what to look for before taking a long position. There are a number of ways to take a long or bullish position on a stock or ETF. One way is simply to buy the stock or ETF, while another way is to buy call options on the stock or ETF. No matter how you choose to take a long position, you first need to know what to look for in that stock or ETF. The question is, do you know what to look for? I like to buy a temporary dip within an overall uptrend. Therefore, I look at the chart and I ask two questions. Is the patient generally healthy? And does the patient have a cold? Allow me to translate this into market terms. Is the patient generally healthy? Means, is the stock or ETF in a general, overall, long-term uptrend? And does the patient have a cold? Means, is there a dip or short-term oversold condition that appears to be temporary and therefore buyable? After all, we want to buy the dip with confidence that the stock or ETF will recover fairly quickly. In medical terms, we're looking for a patient that has the sniffles, not a fatal disease. As a swing trader, I tend to check the daily charts for this. To help me answer question 1, is the patient generally healthy? I check the 200-day simple moving average, or SMA, and the 50-day simple moving average. I want to see both of them sloping upward, especially the 200-day simple moving average, since it gives a fairly reliable indication of the overall uptrend. To help me answer question 2, does the patient have a cold? I check overbought, oversold indicators such as RSI, the 14-period RSI, and Bollinger Bands on their standard settings. I'm looking for a short-term oversold condition here. So here's example number 1. And in this case, the patient is healthy overall and caught a cold, but will probably recover. And so this is PNRA, which is Panera Bread. It's a well-known restaurant company there. I've eaten there myself a number of times. And so I believe in the company. And also, I like the overall trend. Look at the 200-day simple moving average. It's trending upward. And the 50-day simple moving average is overall trending upward. And yet, it's near, it closed right near the bottom Bollinger Band, indicating that it is perhaps short-term oversold. So the patient caught a cold, yes, but that doesn't mean that the patient is dying or fatally, has a fatal illness or anything like that, because overall the trend is up. And so the patient will probably recover from this cold, so to speak. And if we look at the RSI, it's not quite in oversold territory, but it could certainly get there. So this could either be purchased now, or it could at least be on our watch list. On the other hand, here's example number 2. In this case, the patient, in my opinion, is not healthy. And you do not want to catch whatever disease this patient has. So even though this has dips in it. I don't believe that these are necessarily buyable dips, meaning I don't think you want to buy these dips, because let's look at the overall trend as indicated by the 200-day moving average and the simple moving average and the 50-day simple moving average, both trending downward. So it's pretty clear that the patient is not healthy here, and personally I wouldn't touch this stock, at least at this point in time. So if you're not giving your stocks or ETFs a checkup before taking a long position, then the prognosis won't be good. Keep your account healthy by asking the two crucial questions before you go long. If you'd like more help with this or with options, finance, trading, or investing in general, please feel free to contact me. I'm here to help you. My email address is davidmoadel@gmail.com. Thanks a lot, and I'll talk to you soon.